In this video, I'm going to cover the basics of job order costing and the related journal entries. So first, let's start with the process of accumulation. Accumulation is when costs have been incurred, but they've not yet been assigned to any jobs. So we've maybe purchased the materials, our laborers have been working away in the factory, and overhead is being incurred, but we don't know exactly what has been used on which job yet. So let's look at those journal entries of accumulating the costs into those temporary accounts. So first, let's look at materials. Bluebird Company purchases 10,000 raw materials on account. So we've bought some materials, they haven't been used for any jobs, and so we're debiting them into raw materials inventory and crediting accounts payable because it says they were purchased on account. And so into our raw materials inventory asset account, we're accumulating those costs of $10,000. Next, let's look at labor. The gross earnings of the factory workers for Bluebird Company during the month are $5,200. The employer's payroll taxes were $1,200 and fringe benefits were $950. So again, these are people working in our factory, so they are manufacturing costs, but we don't know yet what they've worked on. So we're going to accumulate the total of all of those costs into the factory labor account. And then we're going to credit factory wages payable for the gross amount, credit employer payroll taxes payable for the amount of the taxes, and credit employer fringe benefits payable for the amount of the fringe benefits. Our credits are all going into liability accounts because eventually we're going to have to pay out that money to the various parties. And so we are debiting factory labor as our holding account to accumulate all of those labor-related costs. Next, we can look at a simple journal entry for overhead. Manufacturing overhead costs incurred on account were $8,100. And so these are overhead costs relating to our factory, maybe utilities, maybe depreciation. And so we're going to debit those into manufacturing overhead and credit accounts payable because this tells us they were costs incurred on account. And so again, we're going to accumulate those overhead costs into our manufacturing overhead holding account. So now we have all of these costs for materials, labor, and overhead. We've accumulated them into some accounts. And now the next step will be to assign the costs relating to specific jobs. So in assigning, what we're doing is we're moving costs out of those holders and into work in process inventory. So we're taking our materials, our labor, and our overhead and assigning them to specific jobs through the process of journal entries. So let's look at our first journal entry relating to assigning costs to work in process. So let's start with materials. In January, Bluebird Company requisitioned raw materials for the following jobs. And we have job 1, job 2, and job 3. And so those are the costs that are going to go into our work in process inventory account. And if we add those together, we get $5,250. Then it tells us that materials related to general factory use were $1,600. Those are materials that were used, but we can't directly trace them to our products, so they become part of manufacturing overhead. And so our journal entry then is a debit to work in process inventory for the amount of the jobs, a debit to manufacturing overhead for the general factory use, and a credit to raw materials inventory for the total amount that was used. And so if we look at our T accounts then, we are going to assign the costs out of raw materials inventory and into work in process inventory for the 3 jobs and into manufacturing overhead for that general factory use. And we have some raw materials left over in our account, which is fine because typically we wouldn't use all of our materials at one time. Next, let's look at our journal entry relating to labor. During January, time tickets show that the factory labor for Bluebird Company of $7,350 was used as follows. So again, we have the labor that can be specifically traced to the 3 jobs, which will go into our work in process inventory, and then we have some labor that related to general factory use, which will go into our manufacturing overhead account. So we're going to debit the total of our 3 jobs of $5,550 into work in process inventory, debit our general factory use into manufacturing overhead, and credit it all out of the factory labor account. So here, if we look at our journal entries, we will be assigning the costs out of factory labor and into work in process for the direct amount of the 3 jobs and into manufacturing overhead for the general factory use. And now we can see our factory labor account ends at a 0 balance, and it should be a 0 because all of those costs need to be assigned either into manufacturing overhead or into work in process inventory. Next, let's look at our journal entry relating to overhead. During January, Bluebird incurred $5,550 of direct labor costs. We need to prepare the journal entry to assign the overhead using a predetermined overhead rate of 120% of direct labor cost. So our rate here is 120%. So we're going to take our direct labor times 120%, and we can see here then that the amount of overhead we need to assign for those jobs is $6,660. So we're going to debit work in process inventory and credit those costs out of manufacturing overhead. And if we look at our account then, we will assign the costs out of manufacturing overhead and into work in process inventory. And we may have some overhead left over in the account, and that's fine because we have actual costs that are coming in, but we're assigning costs out based on that predetermined overhead rate. Next, let's look at what we do when a job is completed. So Bluebird Company completed jobs 1 and 3 during January. So in order to do the journal entry for the completion of those jobs, we need to figure out what was the total cost of those jobs. And so we need to find the 3 elements, the direct materials, the direct labor, and the manufacturing overhead relating to those jobs. So let's flash back and look at our materials. In that journal entry, we were told that for job 1, materials was $3,100, and job 3, it was $950. So that's what we would put here under each job. Now let's flash back and look at our labor journal entry. In that journal entry, we can find the actual amounts that related to both of those jobs. For job 1, it was $2,200, and job 3, it was $1,750. And we'll add that in here to our accumulation of costs for those jobs. Next, we need to do our overhead. So if we flash back to overhead, at that point we learned that our rate was 120% of direct labor costs. And so in order to figure out our labor costs for each specific job, we need to go back to our table, take our labor costs for each job, multiply them by our rate of 120%, and so now we can determine the overhead that would relate specifically to job number 1 and job number 3. And then we can add those up and find that the total cost of our job 1 and job 3 together add up to $12,740. And so we can do one journal entry for both jobs, and we're going to credit those finished jobs out of work in process inventory and debit them in to finished goods inventory. And so we can see those costs will be credited out of work in process inventory and debited into finished goods inventory. And the remaining balance in our work in process is actually those costs that would relate to job 2, which was still in process. Lastly, we can look at the sale of a job. So it tells us in February, Bluebird Company sold job number 1 for $10,200 on account. And so in order to do our journal entry, we need to look and see what was the original cost for job 1. So again, if we flash back, we can see when we added up our costs that my total cost just for job 1 was $7,940. So when we go to record our journal entry for the sale, first, we're going to record the sales side with a debit to accounts receivable and a credit to sales revenue for the sales price of $10,200. And now we can record the cost of goods sold with a debit of $7,940 and a credit to finished goods inventory for that cost of the job. And so our last step here in our T accounts is we're moving that sold job out of finished goods inventory and into cost of goods sold. And so our ending balance in finished goods actually relates to that unsold job number 3. And you can see here now that on my left side, all of these accounts are on my balance sheet. They're tracking my inventory and my costs. And then once those jobs are sold, they become cost of goods sold, which ends up on your income statement and is used for evaluating your gross profit. Okay, so now we've walked through the whole entire process of job order costing and all of those journal entries we need to do for the accumulation, the assigning, the completion, and the sale of a job.